we are continuing the chapter Death of a Partner. So already we discussed two methods of computation of share of profit or loss which is payable to the outgoing partner or which is payable to the, here in this case it is the deceased partner. So now we will see how to prepare deceased partner's capital account. It is very much similar to preparation of partner's capital account. Only difference is, see, when you do partner's capital, the format is particulars and usually there will be 3 partners, so 3 amount columns. Similarly on the credit side also you will draw particulars and 3 amount columns, isn't it? So now when you are asked to do deceased partner's capital account, you need to have only one amount column because we are doing only for that particular partner who died. Okay, so we will be doing like B's capital account if B is the deceased partner. So the format is particulars amount, particulars amount. It is given on page 7.5. You don't have to study anything new. Just take page 7.5 there. See, they have prepared the deceased partner's capital account, and as usual you have to start with the opening balance on the credit side. Everything it is similar to preparation of partner's capital. You will read the adjustments, you will record the goodwill, then from balance sheet you will have to transfer general reserves, P&L, everything you will do. But you have to remember one point. See, suppose you are transferring general reserve, we know that it will be transferred to the opposite side here. That means it will come to the credit side in deceased partner's capital account. So when you write by general reserve and when you take the amount, if it is given like 21 lakhs, the total amount is 21 lakhs, usually what will you do? You will divide it in their old ratio. So here also you will divide it in the old ratio, but you need to consider only for the partner B, the deceased partner. Okay, if his share is like 1/3, you will do 21 lakhs into 1/3 and you just have to write that amount here because we have only one amount column. So that's the point you have to remember. As usual it should be divided in old ratio, but you need to consider only the deceased partner's share. Then on the debit side you will have items like drawings, interest on drawings, then capital you will have, on the credit side you will have interest on capital. That means basically all those items that increases your capital. Your capital means the partners, okay, because we are discussing partners account. So all those items that increases the partner's capital account should be written on the credit side of the account. And all those items that reduces their capital balance like drawings, interest on drawings, etc. will come on the debit side. And the balancing figure of this particular account must be transferred to executor's account. Executor means he is the legal representative to whom this amount is transferred, because we can't transfer directly to the partner because in this case it is not retirement, it is the death of a partner. So we will have to transfer to his legal representatives. So the balancing figure will be transferred or written as to executor's account. Okay. Now there are different methods of payment of amount to executor. Just like we discussed in the chapter retirement, here also we have different methods of payment of amount due to the deceased partner. So you give that heading, methods of payment of amount due to the deceased partner. Okay, we can pay either in lump sum or in installments. So when you pay in lump sum, what is the meaning? Immediately you are paying them. To whom you are paying? To executor you are paying, isn't it? So in partner's capital account, can you write to bank? No, that should be always transferred to executor's account. Understood? Now when you prepare executor's account and if you are paying them immediately or if you are paying in lump sum, there you can write to bank, not in partner's capital. Partner's capital balance always transferred to executors. So how will you settle executors when you pay in lump sum? It will be deceased partner's executor's account debtor to bank account. Understood? So, this is the settlement entry when you pay in lump sum. Then, second case, when you pay in installments, there will be something else, that is interest also you will have to provide. But here, the deceased partners, representatives or executors have an option to choose between interest and share of profit. When you pay in installments, you know that the firm will have to pay them interest. In the chapter retirement also we discussed the same. We had to pay them interest. So, here also we will have to pay interest when you pay in installments. But the representatives or executors have an option to choose between interest or share of profit. Okay? They can either choose interest at the rate of 6% per annum, that is one option, or they can choose for the share of profit. Either of these two, I mean the higher one they can choose. Understood? So, this is the option given to executors when there is a balance amount to be paid them or to be paid the executors, to the executors. So, they can choose between these two. So, now when normally we will be providing them interest, so that time we will see what is the journal entry, just like your retirement chapter. So, the capital account balance to be transferred always to executors. So, that is the first journal entry under your installments method. Deceased partners capital balance transferred to executor. So, the entry will be, what will be the entry? How it is written in your textbook, deceased partners capital debtor to, did you see that ledger there? Ledger there, they have written to deceased partners account, no. So, this is the entry. So, it is deceased partners capital account debtor to deceased partners executors account. Next, what should we do? We have to provide interest to whom? To executor. So, the entry will be, again that will be transferred to executor's account. We can't transfer it to capital. We are providing all these to executor. So, interest account debtor to deceased partners executors account. Then finally we will pay the executor. So, that time you can write the settlement entry, that is deceased partners executors account debtor to bank account. Understood? So, these are the journal entries when you pay in installments. First, transfer the balance to executor. Then interest also you will transfer to executor. Then settlement of executor's account. Similarly, we had 3 entries when you prepared retiring partners loan account. So, these two are similar. Only thing is there it was retirement, now it is death of a partner. Okay, so now we will move on to preparation of deceased partners capital account. That is a usual question asked from this portion. We will do illustration 18, that is the last illustration. Page number 7.23, illustration 18. Yes, 3 partners Sharma, Verma, Goyal, and on 1st April 2012 their balances are given. You see who is the deceased partner. Verma's capital account to be prepared. Okay. Yes, so many adjustments are given. So, we will start Verma's capital account. So, draw the format. Yes, so how to start capital account? We will have to start with the opening balance. So, write by balance brought down. And from where will you get the opening balance? Usually it would be there in the balance sheet. Here it is given in that paragraph, first paragraph, Verma's capital balance 4,20,000. So write 4,20,000. Next, the usual steps we'll have to follow here. Once you write, after you writing the partner's opening balance, what should we do? We have to either go through adjustments or go through the balance sheet items. So now we'll go through adjustments. Here there is no balance sheet given, so we'll go through adjustments. Interest on capital calculated at the rate of 10% per annum. And always you have to remember one point here. At the time of death of a partner, here the partner died on, the date is very important. Here he died on 30th September 2012. That period or date of death is very important because whenever you compute interest on capital, interest on drawings and all, or interest on loan, this period you have to consider because we need to pay him only till his date of death. Understood? So we'll be paying interest on capital starting from 1st April, that's the beginning of the year, till his date of death. That means till 30th of September. We need not pay after that. Understood? So the period is very much important in this death of a partner. So that you have to remember whenever you compute interest and all. Yes. So we'll write by interest on capital. All those items that increases partner's capital must be written on the credit side. So we'll write by interest on capital. On which amount you are going to compute this? On this 4,20,000, we'll compute the rate is given 10% and it is to be computed for 6 months. Why it is 6 months? April 1st till 30th of September. So that will be April, May, June, July, August, September. That is how we are computing for 6 months. So the amount is 21,000. You can write it as by interest on capital. In your textbook it is written like by P and L suspense. That is also fine. Or else you write by interest on capital. Deceased partner's legal representative will be paid 35,000 for his share of goodwill. Now what is the journal entry for goodwill? It is similar to retirement chapter. It is gaining partner's capital debtor to, instead of retiring you will write to deceased partner's capital account. So what will be the posting? It will be posted to the credit side. So we'll write by gaining partner's capital account. So now we need to find who are the gaining partners. Should we compute the ratio? Should we apply the formula new ratio minus old ratio? Here we don't have new ratio. So this will be, specifically it is not given. So gaining ratio you can take it as similar to or same as old ratio. So old ratio here it is not specifically given. So assume their ratio as equal. Now when one of the partners retire, that means others will be sharing in 1:1 ratio. So gaining ratio also will be 1:1. That means equally you can divide. So you can write by gaining partners account here. Gaining partners means Sharma and Goyal. See, if you don't have time, for exam, if you are in a hurry, no need to divide the 35,000. You can just write like this. By Sharma and Goyal's capital account, write 35,000 together. No need to divide it in the gaining ratio. Understood? Actually, you have to divide, but in case if you don't get time, you do like that. Okay? So the correct step is you should write it separately like by Sharma's capital account and by Goyal's capital account. And 35,000 we will divide equally between partners, so 17,500 each. Then the next one, firm had a reserve. Reserve will be there on the liability side of the balance sheet, which we have to take. Which we have to take to the opposite side. So it will come on the credit side here. And now will you transfer entire 21 lakhs? No. What did I tell you before? You have to divide as usual in the old ratio. So what's the old ratio here? It is equal. That is 1:1:1. So, divide in that particular ratio, but you need to consider only for the deceased partner Varma. So, we will write by general reserve, entire 21 lakhs you need not write, divide it in the old ratio. So, Varma's share is 1 by 3. So, 21 lakhs into 1 by 3, that is 7 lakhs. Sorry, the amount is 2,10,000, it is not 21 lakhs. Just correct it, it is 2,10,000 into 1 by 3. So, just cut one 0. So, that is 70,000. Okay. Next one, his share of profit. So, they are talking about calculation of share of profit or loss. We have two methods. One is time basis and the other one on the basis of sales. So, we will see which method here it is. It will be calculated on the basis of sales. What is the formula? Last year's profit by last year's sales into sales till date of death into his share of profit, which we have learned already. It was also specified that sales during the year 15 lakhs. Okay. Sales from 1st April till 30th September means sales till date of death 3 lakhs. Profit is given 3 lakhs. So, we have to do calculation for this. Leave space for completing the account. Take your working note. Write working note here after the account. That is the formula you have to write to get the share of profit. So, write the formula, that is last year's profit by last year's sales into sales till date of death into his share of profit. Understood? Last year's profit by last year's sales into sales till death into his share of profit. So, now we will just substitute figures. Last year's profit is given 3 lakhs divided by last year's sales is given 15 lakhs into sales till date of death. Sales till date of death is 3 lakhs into his share of profit. His share of profit means the proportion that you have to take, which is 1 by 3. Okay, so now you do the calculation. The amount is 20,000. So, that is deceased partner's share of profit. Now, we can post it in this account. That will be posted as, what is the journal entry for this share of profit? It is P&L suspense debtor to deceased partner's capital account, isn't it? Or if there is any change in their ratio, I mean if there is change in the ratio between remaining partners, then there is a slight change in entry also. It is similar to goodwill entry, gaining partner debtor to deceased partner. So, those two entries we have discussed already. So, since there is no change in ratio, usually there won't be any change in ratio, and you can just write it as by P&L suspense, his share of profit or share of loss. If you are getting a share of loss, if it is a negative figure, you write to P&L suspense. So, here the amount is 20,000. What else is there? Yes, now we finished all items. Understood? So, as usual we started with the opening balance, then we referred adjustments. If there was balance sheet, you have to refer the balance sheet. Then transfer profit or loss on revaluation if you are doing revaluation account also. Understood? So, all 4 steps we have to cover in this deceased partner's capital account also, similar to your capital account. So, now find the balancing figure and which we will transfer to the balancing figure of capital account. Deceased partner's account must be transferred to his executor. So, write to Varma's executor's account. This is the balancing figure. Amount is 5,66,000. Should we write interest and all in this partner's capital account? Totals are 5,66,000 can close it. See, should we write that interest account or to bank in this account partners capital? No, it will be written only in executors. So, in case if the question asks you to do executors account, there you will have to do interest account or the settlement entry like to bank, just like we prepared the loan account. Okay. Next we will work out illustration number 10. Just take illustration 10, page number 7.13. XYZ 3 partners, their proportions are given 3/4, 1/8, 1/8. If you want, you can make it to the common base so that you will get in the form of a ratio, or else take like this. I mean, proportion is also fine. Balance sheet is given, adjustments are given. Determine the amount payable to legal representatives of the deceased partner by preparing necessary accounts. That means, which account will you prepare? You have to prepare deceased partner's capital account. Okay, so we will start preparation. Are they asking you to do the executors account? That also you have to check. Amount payable to legal representatives by preparing necessary accounts. Okay, they haven't specified what all accounts you have to do. But the amount payable to deceased partner means you will have to do deceased partner's capital account. Then there is one more account, that is executors account, isn't it? Shouldn't we show the final account or final settlement of the amount? So for that we will have to do executors account. So here they haven't specified, but they ask you to do necessary accounts. That means you have to do both capital account and executors. But if they just specify like prepare partners capital, you need not do executor, just do capital account. So here we will do both. So draw format, what is the deceased partner's name? Z. So Z's capital account you should draw the format. Give column headings always. By opening balance, which you can take from the balance sheet, that is 2,50,000. Then now we will read adjustments. Deceased partner entitled to share of profit up to the date of death, calculated on the basis of previous year's profit. So here we have to take share of profit on the basis of time period. It's not on the base of sales, it's on the base of time. So we will do working note. You remember the formula when it is on the basis of time. The formula is average profit into time period into his share. Here we don't have to take average profit because they are asking specifically to compute on the basis of previous year's profit. So average profit need not be taken, you just have to take last year's profit. So here we will make a slight change in the formula. Instead of average, you take just last year's profit into time period into his share. Understood? So last year's profit, it's given in adjustment 2. Did you see 2016, 2017? So last year's is 2 lakhs, that is 2019 figure, into time period till the date of death. When did he die? He died on 30th September. So start counting from April, starting of the year. April, May, June, July, August, September, October, November, December. So that is for 9 months. Into his share is, what is his share? Z share is, proportion is 1/8. So share of profit will be 18,750. So which we can post as by P&L suspense account 18,750. Okay. Then next adjustment is share of goodwill calculation. There the formula you have to apply, see, on the base of 3 years purchase of average profit of last 4 years. So what's the formula for goodwill here? Average profit into number of years purchase. So we'll write the formula, we'll do calculation for goodwill. Average profit into number of years purchase, and here average profit means it's total divided by number. So we have 4 years profits, 8 lakhs plus 6 lakhs plus 4 lakhs plus 2 lakhs. So average profit, you can just write the formula, that is total profit divided by number of years. It's not number of years purchase, it's just number of years. Both are different. So here number of years means it is 4 years, 1, 2, 3, 4. 4 years profits are given. So the average profit you will get like 5 lakhs into number of years purchase is given in the question 3. So your goodwill amount is 15 lakhs. This is the total goodwill of the firm. First you should get what is the deceased partner's share of goodwill, that is 15 lakhs into what is his proportion? His proportion is 1/8. So deceased partner's share of goodwill is 1,87,500, which you have to divide in the gaining ratio. Okay. So gaining ratio here you just have to check whether new ratio is given. If it is given, apply new ratio minus old ratio, or else gaining ratio can be taken same as your old ratio. No need to apply formula. So here new ratio is not there, so we will take same as old ratio. Old ratio is not given, proportions are given, so we will convert it into ratio. It's given like 3/4, 1/8, 1/8. How will you make it into the common base? 4 into 2. So here also you have to multiply by the same. So the ratio will be 6:2, that is 3 into 2, 6. 6:1:1 is the ratio. Out of that, is it retired? So now the gaining ratio is 6:1. Understood? So divide this 1,87,500 in 6:1 ratio, that is the gaining ratio. So if you don't have time, like I told you before, you can just write by X and Y's capital account, total 1,87,500 you can write there. Understood? No need to divide if the total is, sorry, if you don't have time, okay, or else we have to divide in this particular ratio 6:1. So now we will write separately, like by X capital account and by Y's capital, divide that 1,87,500 in 6:1 ratio. So amounts you will get like 1,67,14 and 26,786. Okay. Yes. So goodwill is also over. Then next one, drawings amounted to 18,000. Where will you write drawings? It should come on the debit side. Items that reduces capital account or capital must come on the debit. Interest on drawings also on the debit if it is there. Interest on drawings, when you compute, always consider the time period. Okay. Then we'll move on to third step while doing partner's capital. Third step is go to the balance sheet. You have general reserve on the liability side. Did you see that? So we have to transfer it to the opposite side. So write it as by general reserve. Divide it in the old ratio. So 50,000 into what is that retiring partner's share? It is 1/8. The proportion or the ratio also you can take. It's also 1/8. No, 6:1:1 means it is 1/8. So general reserve will be 6,250. Okay. Then there is an item like loan, Z's loan on the liability side, which also you have to close it, or which also you have to transfer to capital account. To the opposite side we will write by Z's loan. Z's loan is 50,000, which you can directly write the amount because it is specifically given Z's loan. So that is Z's amount. Now you don't have to divide it again, just write 50,000 directly. Then nothing is mentioned regarding interest on loan, interest on this 50, but you should pay that amount because we know that interest on loan is a charge against profit. We have certain provisions in the absence of deed. What is the provision regarding interest on loan? It is a charge against profit. It must be paid even if the firm incurs loss, and it should be given at the rate of 6% per annum. So we have to provide interest on loan even if it is not mentioned. So we will compute on 50,000 into the rate is 6% per annum. So now we should consider the time period. What is the time period here? April 1st to his date of death is 31st of December, right? Yes. So that is 9 months, which we counted already. So that is into 9 by 12. Amount is 2,250. Just look into your asset side also, see whether we have to transfer any assets. Nothing else is there. So we finished all 4 steps. Last step is usually transfer profit or loss on revaluation. Here we don't have any revaluation. So all 4 steps we covered. Now you can just find the balancing figure. Okay. So balancing figure we will transfer to executors account, that is 4,96,750. Write it as 2 Z's executors account. Write totals, that is 5,14,750. Okay. Next we have to do, the question is not over, we have to do Z's executors account. They have asked you to prepare necessary accounts, that means executors account also you have to do, that is particulars amount, particulars amount. Now we will start it with the balance, that means we have written 2 Z's executors no, which we will take to the opposite side, that is by Z's capital. Take that balancing figure from the previous account, that is 4,96,750. Should we provide interest? Usually yes, but in this question nothing is mentioned regarding the rate of interest. So we need not post all those things. I mean like by interest or that to bank, the settlement entry, all these will come in executors account. But in this question, since nothing is mentioned regarding the interest rate and all, you can just close this account. That means the balancing figure you just write to balance carry down. But if they have given the rate of interest and all, you have to record the interest, then final payment also you have to do. Here nothing is mentioned, so you just write the balancing figure and you just have to write the balancing figure like this. Okay. So with this we are winding up this chapter, death of a partner. Make sure you know how to do this deceased partner's capital account, because that is a sure question for your exam, and which requires the previous portion, that is calculation of share of profit or loss of deceased partner. So practice these questions.